Understanding market structure is very crucial in trading, and this is a deciding factor whether you're going to be a profitable trader or not. It doesn't even matter whether you're trading with whatever concept. If you don't really have a good understanding of market structure, this affects your entire knowledge base. If you watched the previous video where I talked about my analysis on US NAS100, and despite the fact that when I made that video, price was around this key level, right here. This is where we were yesterday when I made that video, and I talked about the sell side liquidity resistance right here. You can watch the video, and I said I'm anticipating for a run on this sell side liquidity and then a potential expansion to the upside. And as you can see how beautifully price went straight to the downside, took that sell side liquidity, expanded. So the moment this sell side liquidity got taken, that was an opportunity for a buy and then potential continuation to the upside. Like I said previously, overall I'm still bullish on US 100 in as much as we've had this downtrend. Even on the 4-hour time frame, we've been on the downtrend, except this key level where we created a higher low, broke structure right here. So the only thing I would do if I'm looking for a potential re-entry on this one, I wouldn't really jump into where we are right now because we're at a very critical zone. If we're going to see a retracement or a potential reversal, we are right there. And I'm not saying we're going to reverse. I'm not looking for a sell. I'm only looking for a buy on US 100. And I never try to trade the buy and sell. I only trade one directional bias. Now, so far as you can see, prices come into our premium zone. So if I was to look for any area to see a retracement, it will be at a premium zone. And if we look right here, we'll have a low and we'll have a high. And this was the last impulse move to the upside before dropping to break this structure. So if we are to see any sort of reaction, any sort of move to the downside, I'll be anticipating for that to happen from here to potentially see any sort of reaction from that key level for price to come to the downside. But potentially, if I do see price come to the downside, the only key level that I'll be interested in looking for a buy would be this key level right here. Within this high and this low, this inefficiency right here would be my most ideal key level. If I want to look for a buy, it will be from this green box. And if price doesn't come there and then continue to go to the upside, I'm not going to try to chase it to look for any entries above this key level. If it doesn't come down here, I'll not try to enter it for any reason. And if I do see price come down here, what I'll be looking out to see is a potential shift in market structure on the 4 minutes time frame or the 3 minutes time frame. If I do see that, then I'll look for a potential buy to continue to the upside. Overall, I still remain very bullish, and the reason for that is because from the higher time frame, like for example, if you look at this right here, if you look at this now on the weekly time frame, you can see a low, a high, and look what we came down into. If you use the Fibonacci from this low to this high, you can see we came down into a discount zone. And what's resting at a discount? Last down close candle with an expansion. So the only other place I'm anticipating from this move, I'm anticipating for price to come into this inefficiency return right here. That would be my draw on liquidity. So potentially, I wouldn't be surprised to see a continuation, to potentially even run the overall all-time high and creating a new all-time high. So don't forget, we do have non-farm payroll on Friday. So trade carefully, trade wisely, don't over leverage, always use good risk management. So I appreciate you for tuning in on this one today. If you have any questions, drop it at the comments and I will reach out to you and I'll give you a reply right there.